Today, we're exploring the world of precious metals investing. Precious metals like gold, silver, platinum, and palladium have been valuable assets for centuries. They're known as safe haven investments and can protect wealth in times of uncertainty. But before you dive in, it's important to understand how these investments work and what factors affect their value. In this video, we'll cover 15 essential things every beginner should know before investing in precious metals. Let's jump in. This is Wealthilocity. Here you create, protect, and grow your wealth fast. Precious metals are rare, naturally occurring metals with high economic value. The most popular investment metals include gold, silver, platinum, and palladium. Each of these metals has its own unique characteristics and uses in various industries, from jewelry to electronics. Understanding the rarity and demand for precious metals gives you insight into why they hold value. Their scarcity combined with widespread industrial and cultural uses makes them a stable asset class. Each metal's unique properties also make them differently suited for specific investment goals. Precious metals are seen as a hedge against inflation and economic downturns. During times of crisis, their value tends to hold steady or even increase, making them attractive for preserving wealth when other assets like stocks or real estate are declining. Knowing the role of precious metals as a safe haven asset helps set realistic expectations. While they may not provide explosive returns, precious metals add stability to your portfolio and can serve as insurance against economic shocks. Gold is the most widely recognized and popular precious metal. It has been used as a store of value for thousands of years and is often a go-to asset in times of financial uncertainty. Central banks hold large reserves of gold, which supports its stable demand. Gold's historical stability makes it appealing for beginners. However, while it's a reliable way to store wealth, it doesn't yield interest or dividends like stocks or bonds. Knowing this helps you approach gold as a wealth preserver rather than a high-growth investment. Silver is unique among precious metals because it has significant industrial demand. It's used in electronics, solar panels, and medical equipment. This dual demand from investors and industry means that silver's price can be more volatile than gold's. Silver's industrial uses mean that its price may fluctuate based on changes in technology or industrial demand. If you're considering silver, be prepared for more price swings. Silver is often more affordable than gold, making it accessible for smaller investments. Platinum and palladium are primarily used in the automotive industry, especially in catalytic converters, which reduce harmful emissions. Their prices are strongly tied to automotive demand, emissions regulations, and shifts toward electric vehicles. Investing in platinum and palladium can offer unique exposure to industrial trends. However, their dependence on a single industry makes them more susceptible to supply and demand fluctuations. For example, a rise in electric vehicle adoption could decrease demand for these metals over time. When investing in precious metals, you can choose between physical investments like coins or bars and paper assets like ETFs, mining stocks, and mutual funds. Physical investments mean you actually own the metal, while paper investments represent an interest in metals without direct ownership. Physical metals offer tangible security and a sense of ownership, but they require secure storage and insurance. Paper assets are easier to trade and offer liquidity, but they don't give you direct access to the metals. Choose based on your personal goals, risk tolerance, and investment timeframe. If you invest in physical metals, storage and security are key considerations. You can store metals at home in a secure safe, but for larger quantities, third-party vaults or depositories are common. Some companies offer allocated storage, ensuring your metals are stored separately. The cost and logistics of storing physical metals can add to your investment expenses. Assessing storage options and potential insurance costs is essential, especially if you want easy access to your holdings. Knowing where and how you'll store them helps you plan for the true cost of owning physical metals. Liquidity refers to how quickly and easily you can buy or sell an asset. Gold and silver are generally more liquid than platinum and palladium, especially in physical form. Paper assets like ETFs are typically more liquid than physical metals, as they can be traded on exchanges. If you need to convert your investment into cash quickly, gold and silver are usually easier to sell. Understanding liquidity helps you determine which metal and format are best for your financial goals, especially if you might need quick access to funds. While precious metals are considered safe assets, they still carry risks. Prices can be volatile, especially for silver and platinum. Additionally, precious metals don't generate income, so profits rely on price appreciation, which can take years. Being aware of the risks helps you avoid unrealistic expectations. Precious metals are typically a long-term hedge rather than a quick profit opportunity. Knowing this helps you see them as part of a diversified portfolio rather than a primary growth asset. Precious metals tend to perform well during economic uncertainty or downturns. In times of stability, they may underperform compared to growth assets like stocks. However, during recessions, they can act as a buffer to protect your portfolio. Understanding how economic conditions impact precious metals helps you time your investments better. They're often best used as a hedge in an uncertain economy, but may not deliver strong returns in stable markets. This helps set realistic expectations for their role in your portfolio. Precious metals are known as an inflation hedge, as their value typically rises when inflation is high. This is because when currency values decrease, metals retain or even increase in purchasing power. During periods of high inflation, metals can help preserve wealth and protect against the declining value of currency. Understanding this can help you decide if precious metals are a good fit for your portfolio, especially during times when inflation is a concern. Interest rates have a big impact on precious metals. When interest rates are high, investors may shift to assets that offer interest, reducing demand for metals. Lower rates, however, often lead to higher metal prices as more investors seek safe haven assets. Understanding the relationship between interest rates and metal prices helps you gauge when to enter or exit the market. During low-rate environments, precious metals may perform better, while rate hikes could lead to decreased demand and price drops. Precious metals investments may come with tax implications. Selling physical metals or paper assets could trigger capital gains tax, and some jurisdictions also impose sales tax on physical purchases. Taxes can impact your overall returns, so it's essential to understand the tax treatment for precious metals in your country. Consulting a tax advisor can help you make informed decisions and avoid unexpected tax obligations when it's time to sell. Precious metals can add stability to a diversified portfolio. Rather than putting all your money in stocks or real estate, adding a small percentage in metals can reduce risk and provide a hedge against economic downturns. Diversification with precious metals helps balance your portfolio. Metals don't move in the same direction as other assets, so having a small allocation in metals can lower volatility and provide protection during market declines. To start investing in precious metals, decide on the type of metal, whether you prefer physical or paper assets, and a reputable dealer or broker. Starting small allows you to get familiar with the market and make adjustments as you learn more. Getting started is often the hardest part. Start with a small investment to understand how prices fluctuate, assess your risk tolerance, and get a feel for the market. Research reputable sources and choose options that align with your financial goals and time frame. And that's it. 15 essential things to know before investing in precious metals. Precious metals are a unique way to protect and grow your wealth, but they come with specific considerations. Make sure you understand these basics, choose a strategy that aligns with your goals, and remember to diversify. If you found this video helpful, please like, subscribe, and share it with anyone interested in learning about precious metals. Thanks for watching, and happy investing!